Don't just sit there with an empty property praying for a miracle to happen. Be resilient, respond to the market, look at what market has shifted in and has a demand, and have a conversation with your lender and take the appropriate action to get that property filled. Don't sit there with an empty property. So finance for new purchasers. So I've got a few purchases going on at the moment. I said on a previous video this week that I have withdrawn from a couple of those properties. They weren't significant buy below market value deals, and because of that reason I decided to withdraw, because I do believe the correction is now coming in terms of prices in the market that I buy in. So lenders for new purchases. We've seen some lenders exit. There are still lenders out there lending. And it's a case of having the conversation with either existing lenders who know you and know how you work and understand that you're a good client and you pay your bills and you pay your mortgage and you never have any issues. But have conversations with brokers. Brokers are the people who are having those conversations with lenders and are understanding what certain lenders are doing and what are prepared to do what in this current market. We may see some loan to values restricted. So if you're used to sort of the 80-85% loan to values, we may start to see that restricted because of the adjustment to allow for a downturn, slight downturn in price. So be fully prepared that the deposits, if you're used to putting low deposits in, be prepared to put more in, which isn't necessarily a bad thing. But there will always be lenders out there. I don't think we're going to see interest rates rise because the cost of borrowing has reduced. And yes, there will be some lenders exit the market, but I do not believe there will be enough for the existing ones to start monopolizing and charging higher interest rates. I wouldn't worry about a short or medium term impact on the cost of borrowing at the moment. Okay, so moving off from lenders, let's talk about existing property people. So people like you and I who are invested in buy-to-lets, developments, whatever. And let's talk about where some of them are going to start to struggle and they will need help. And sometimes that help may come in the form of other investors or developers stepping in to help them or take over the project, buy them out, whatever it may be. I'm not going to talk about the specifics about how you could buy people out and all that, because we could be here for hours. I'm just going to highlight what I believe are some of the markets which are going to potentially struggle. Let's start with this rent-to-rent sector, which I have a view on. I'm not going to get into my opinion and my view on it right now. All I can say is rent-to-rent, where people are renting a property from a landlord who owns the property and paying a price, and then they are renting it out to a certain part of the market for a higher amount, gross. They are already starting to shift and struggle. And the first market which I've seen to start to struggle is the serviced accommodation model within this rent-to-rent. Now, there's loads of videos and loads of people out there offering support, offering advice on how these operators can shift and change to maximize their income in the current circumstances. I'm not the person to do that because I do not play in this sector. I'm highlighting that sector as an opportunity whereby, and a warning to other landlords who are considering renting their properties via rent-to-renters. But there will be rent-to-renters out there who are agreeing prices off landlords. And they tend to be, in my experience, higher prices because they believe they can charge more to, say, service accommodation tenants. So the landlord is happy because he's getting a pretty good income. He doesn't have to deal with the tenants directly. He has a person in the middle. We're seeing service accommodation operators, especially at the moment, so early on in this crisis, starting to struggle with the Airbnb and Booking.com policy shift, and obviously with people cancelling short-term stays. So that being said, the inevitable thing that happens is empty properties. Empty properties means no income. Rent-to-renters tend to start in that industry, not necessarily finish, but start in that industry because they have little to no cash reserves. So with little to no cash reserves, rent-to-renters, empty properties, we then start to see where landlords aren't being paid the guaranteed income that they're promised, or the income that's been agreed. Inevitably, we will see properties handed back to those landlords. That's just going to be the nature of the beast. Those landlords may not want to hold on to that property, or they may want to look towards a different strategy. There just may be some opportunities there, whether it's at the front end, helping and stepping in with the rent-to-renter, or whether it's having a conversation with a landlord who's had his property handed back. I don't know, but there will be some conversations to be had and there will be some opportunities. So straight away, an existing strategy that's been hugely talked about, seen massive amounts of growth over the last 2 to 3 years because of the ability to enter that market with very little cash, is now becoming one of the most difficult sectors. So if you're looking to step in, help see where the opportunities are, that could be one market. The other market where we are seeing some shift is definitely the residential market, where individuals have been directly hit and affected by the current crisis, and they are being supported because they are not going to see an eviction process start for 3 months. There may be things where tenants can't pay their rent for the next 1, 2, 3 months. That may have a direct result on the landlord. They may they may want to live on that income. They might need that income to pay the mortgage on that property, and without that income they have to go to the lender, definitely asking for a payment holiday. I have had a lender point blank refuse to give me a payment holiday, and I had 3 phone calls, 3 different takes on it, and their view is they don't have to do it, they're not going to do it. So be fully prepared that even though it's on the media, it's on the news, Chancellor is talking about it, some lenders are going to say no, or they may just dig their heels in and prolong the ability to do that. So you still have to pay the mortgage, you'll have no rent coming in. So you may see some landlords who are quite equity rich but cash poor say, do you know what, I wasn't making much on my single let anyway, 200-300 quid a month. 1 month's going to wipe my profit out for the year, let alone 3 months. I'm just going to sell that property, and if I have to reduce the price by 10-15%, so be it, I'll get the cash out. That is a really unfortunate set of circumstances, but there will be some opportunities for people to step in and buy those properties, and there may be more of those coming onto the market, which will mean that there's more supply and less demand for them, so the prices will inevitably drop. So you may be able to find some opportunities to buy in some properties there. Moving on, because we could talk about different branches off exposed individuals and sectors of the market. Let's move on to the markets that are suffering. I think this is one of the key things that I'm going to be focusing on personally. And when I said at the start of the video, I'm going to talk to you about what I'm going to be doing. This is kind of that, as well as the last little market that I want to bring everyone. We are seeing a change on how people are working, I think, forever. And it's actually been coming for a long time. The virtual way of working from home, more meetings over online, locally, the whole way we are working, I think is going to change. And a lot of companies or a lot of employers will realize that they don't need the overheads that they have had. Things like offices. When I had a company or a retail business a few years ago, one of the biggest costs you have is the rent and the rates. And a lot of the companies have been forced into virtual working or working from home and sending their employees elsewhere. And when you start to look at the net impact on cost of not having rent, rates, the running costs of an office, everything from health and safety to fire alarm testing, there's going to be a huge shift, I believe, in the markets that I'm going to now just say, and that shift will create opportunities for property investors and developers. First of all, retail has been slowly declining for some time. I personally have and won't invest in prime retail because the landlords are trying to sell. They have huge business rates which are payable anyway if the property sits there empty, and they want too much money for these prime retail locations. So I've never bought anything in prime. I don't really look at it. I don't think it's attractive enough. The yields, the return on investments, they're just never going to cut it for me. However, with either retail businesses going to more delivery, more service-led, which is what this is all about. They're now looking to how they can service individuals. We will, and retail companies which are suffering because of the coronavirus has effectively triggered them to make a decision based on a business that was losing money anyway. Classic example, Carphone Warehouse, 80-90 million loss every year. They've closed all of their retail stores. Not triggered by the coronavirus, but it's definitely been brought forward without doubt. They will have a huge impact on the retail environment. And they are one company. We're talking about hundreds, if not thousands, that could have an impact. Prime retail, which has a huge value at the moment in terms of property value, will start to shrink as the shift in demand, consumer demand, takes place. Now, this is going to be a longer term thing. You aren't going to see a huge impact on prices with immediate effect. We are going to see a gradual decline over the next 1 to 3 years, and 1 to 5 years as well in some other cities and locations. There may be opportunities. Prices might start to shrink down for the right location, the right outlet to bring some development eyes to it and change how it's used. But for me, shifting on, I think where we've got a far bigger opportunity is in offices and in pubs, and you all know I like pubs. So let's start with offices and we'll finish with pubs. So offices for a few years now have been, if they're B1, have been the sort of golden pot at the end of the rainbow for developers. When you find a B1 office, it's kind of music to your ears because permitted development, policy hurdles that you don't have to jump over for room sizes and various other bits and pieces, amenity space, bin stalls, all these various things. Permitted development enables a developer to take a B1 office, not just B1 office, I'm just using that as an example because of the subject I'm talking about. It enables you to take the B1 office and convert it under permitted development. And in different countries, there may be different things going on. With virtual working and people working from home, these large offices, which have huge costs associated with them, will start to become available a lot sooner because business owners will recognize how efficient people can work outside of that environment or in smaller environments or cheaper locations around the UK. So some of this prime office space, city centre, really nice locations will become available, which means there will be opportunity to step in and buy those and convert them under the current permitted development right. If it's listed, if it's in certain areas, you can't always go down the permitted development right, but that doesn't mean you still won't get planning permission for these B1 offices. So there will be some opportunities. Don't just jump though into a huge development because it's a B1 office conversion permitted development. They still have huge amounts of thought process, huge costs associated with them, and should be treated like any other development. So B1 offices. But the next thing is pubs. So it's great, I think. I think Boris Johnson, I mean, what a leader he has turned into. I really do. I do believe he has turned into what is a fantastic leader. Brexit and this crisis. But what the government has done, I think, very aggressively, very quickly stepped in and offered support that I have never seen in my lifetime to individuals and businesses. So businesses, including pubs, should absolutely be all over this support package to survive this. And we want pubs to survive. I mean, I am born and bred in Norwich, and we are well known for having a pub every single day of the year. But there has been, over the last 20 or 30 years, a huge amount of decline. That decline is definitely slowed, but there has been a huge amount. However, the current circumstances and the advice from government to not socialise in large gatherings will affect pubs. I saw on the news this morning the CEO, the owner and founder of the Wetherspoons Group, who I'm a big fan of, and I post about their accounts regularly. They have a very good model, and they were slowly, of the piece of the pie of the pub sector, slowly increasing their share of that because they are very good operators. With these difficult circumstances short term, and with financial squeeze long term on everyone, £4.50, £5, £6, £12 for pints of beer and gin and tonics is just not going to cut it. And some of these operators who run individual pubs who charge these sorts of prices, they're just not going to attract long-term customers who are prepared to pay that, because we are all going to receive a financial squeeze. So that's one thing, but people are also going to distance themselves from pubs because of the advice that's been given. And as we go into a more restrictive type of socializing and a more restrictive way to interact with people, and it's going to be done more online, those types of places like pubs unfortunately are going to suffer. Now, this isn't doom and gloom for pubs. I am a huge fan of the pub sector. I worked in the brewery sector, providing support and beer to pubs for a very long time. What will happen is the good operators and the good establishments offering the right products to the right consumer will survive, without doubt. Food-led is absolutely a great win for any pub. any pubs not offering food may want to think about stepping into that market very, very quickly. But even if they don't offer food, but they offer a great experience, better than you can get at your home, because that pub market has shifted. 30, 40 years ago, people would go to the pub because it was typically a better environment than you could get in your home. You know, we're talking about when some houses had toilets in their back garden. So let alone what we've got now, Sky TV, PlayStations, cheap beer from the supermarket. That whole market has completely shifted. So pubs who don't offer an experience to give you and I a reason to go to that pub are going to struggle more now than ever. There will inevitably be pubs off the back of that result that come to the market, and they tend to be more from the lease and tenanted model, which are the big pub companies around the country who own hundreds, if not thousands of pubs, who will start to offload some of their portfolio. Now, pubs, as you know, is a huge thing for me. One, because my location and market dictates that there is huge opportunity. Pubs have always been notoriously difficult to finance, especially when they're empty. So when things are difficult to finance, your competition tends to disappear. And the way breweries and individuals like to sell pubs, they want them gone quickly, which means if you can come in hard and fast, you can tend to get a good deal, a good price. My view is if you can buy a pub cheaper than it would cost to build, you're onto a winner. And most of the times, the bricks and mortar value that you're paying for that pub is significantly lower than it would cost to build it. Now, pubs, they do have various restrictions and hurdles to overcome. It's not an easy measure to convert a pub to residential. Don't necessarily think of a pub as a direct opportunity to convert it and into something other than a pub, because sometimes, done in the right way, pubs can remain pubs. And developers should absolutely look at this in the current market. What I mean by that is I've got a pub conversion going on right at this moment in time. I could have closed the pub and got rid of it completely and gone for full residential. But I recognise in that location, in the history of the pub, there is still a requirement for it, but not in its old form. In its old form, it was full of I don't want to say too much, but it wasn't the best establishment. Let's put it that way. It wasn't where you would want to take your family and your kids. And so that market's gone. They're not sustainable. And it was too big. It was way above the small business rate relief, which made it wasn't attractive to licensees or individuals who wanted to rent it. And that's why we were able to buy it at such a good price. So our plans for it is to bring residential to the disused spaces that are not required in the pub. And when I say that, I don't just mean inside the pub, I mean outside as well. Some of these pubs have parking spaces for 50, 60 cars, but these pubs were built hundreds of years ago, and the land around it was used for car parking space 10, 20 decades ago, because people could drive and drink and drive home. That doesn't exist anymore. So these car parks also have a huge potential to build on. But in doing that, and with a view to retaining the pub, which can be a great commercial investment, you can make it smaller, because pubs they've been overtaken by Costa coffees and Starbucks for people going to during the day and buying £3.50 coffees and staying there and socialising. You go to a pub at 2 o'clock in the afternoon, you'd be lucky to find 2 or 3 people in there. You go to a Starbucks, there's like 30, 40 people in there. The market's completely shifted, but the pubs are huge and they look even more empty. So reducing the size of these pub spaces enough, I think, to bring them below the small business rates relief. One, opens you up to a much bigger market, saves money for the tenant, so the rent could potentially be stretched, and you've got a smaller environment for the same amount of individuals to go to for the market that you're targeting, which is a different market to the ones that this particular pub was before. Consumer driven, family friendly food, good quality, low cost, easy accessible food. This is where it's at for pubs. Now my ambition is to develop this pub and refurbish it so it's ready to rent out, but I'm going to be charging a much higher rent for this particular space. And I'm going to build 4 flats within the pub, and I'm going to put a house on the car park, all from one purchase, all for a purchase which was significantly below market value. So this isn't a doom and gloom about pubs, and this is not an attack on pubs. This is absolutely maximising the opportunity as a developer or an investor in a market which is going to suffer because of the market and the current crisis. and to bring something which is far better than what's existent, which is residential and still commercial use pub. And with all that said, it now brings me to my take on what I'm going to be doing. If you are interested, if not, click on. So cash is king, and I have watched so many gurus and American presenters talk about renting your own property, sell your house, all this rubbish, which is rubbish. Those of you who are sitting in a property that you own outright with no mortgage now, I bet you feel pretty secure because you don't have to worry about that mortgage. Yes, you might be able to get a 3-month mortgage payment. If you have no mortgage, how good does that feel? There is no amount of investments and there is no amount of cash or capital that can ever take away the comfort level of having that. So straight away, having your own home secured first. Cash is king. And how do you get cash? If you've got no cash in the bank, you're starting out in property, then it goes back to basics, which is finding the deals and passing them over to experienced people or people with cash and going along for that journey. In one of my other videos, I forget which one it was, but I talk about people without cash, what I would do today if I had no cash and no experience. What's that? But I think it's the one about the coronavirus right at the start. But if you do have cash reserves, then absolutely use your cash with a lender to maximize the opportunities. And I believe those opportunities are going to come in the form of distressed landlords, office buildings, and pubs, and potentially some rent-to-renters who are struggling in the current market. And I'm going to keep my cash buffer absolutely high. And like I say, the gurus and the people offering videos and advice about get the cash out of the bank and get it into real estate is good advice. But if you have no cash buffer for when things go wrong, or when no tenants pay, or when you need to pay builders and drawdown facilities aren't available, your property portfolio will come unstuck really, really quickly. Now, I know cash in the bank is losing money. Cash flow will make things more easier for you as a developer, and it will always get you a better deal when they come knocking on your door. Keep cash in the bank. Don't go crazy. Don't think because you've got cash in the bank and the deal is that good, you should buy it all with cash. Always use a lender, especially when the money is as cheap as it is. Always use a lender. Don't look at the cost of the loan. Look at what could happen if you had no cash and something came knocking on your door that you weren't expecting. Because when you've got cash in the bank, it is a lot easier to get a lender on board. When you have no cash in the bank and you need a lender because something has happened, if you've never been through it, trust me, it is one of the most difficult things you can ever do. When you have no cash and you need a lender, they're not there, they don't want to know. So keep cash in the bank. Go for the deals, take the opportunities, but do not go mad. Keep your cash in the bank. That's what I'll be doing. I have already had a call today about a pub that's hit the market at far too much money. Phoned me, what would you be interested in, Dan? I offered them half of what it's hit the market on. And they didn't dismiss it. They said they were going to come back to me because obviously they've got loads more developers to call. They're going to try and get the best price. I know that there are only a couple of lenders that will lend on a pub which is empty. And if you're interested in finding out who they are, give me a little private message and I'll send you some links. But it's all well and good getting a higher offer. And sometimes you will lose a deal initially because it's gone to a higher offer, but just sit tight. The amount of people who offer the dreamers who can't proceed, or their lender won't allow them to proceed in the pub sector, I would say it's 2 out of 3. The pub that I was just talking about, the development, I lost that initially to a different buyer. He pulled out, and I knew they would, because what they wanted to use the pub for demonstrated to me they didn't have the experience of buying pubs, and without the experience of buying pubs, told me they didn't have the experience of working with specific lenders, and it was just a deck of cards ready to fall down. And I stepped in when they called me, but it was on my terms and at my price. So pubs, office, landlords, residential, cash is king. Stay safe, keep investing, don't observe the masses and do the opposite, which is look for the opportunities, but look with an educated eye and don't just buy the first thing that comes knocking on your door. Have a great day, guys, and I'll talk to you soon.